Penny stocks can skyrocket overnight, but they're also incredibly risky. Some investors make life-changing money, others lose everything. So what's the truth? Are penny stocks a hidden opportunity or a trap? In this video, we're breaking it all down. What penny stocks really are, why they exist, how they can be wildly profitable and incredibly dangerous. Most importantly, how to spot the ones with real potential in 2025. If you're serious about investing, you won't want to miss this. Penny stocks might sound like stocks that cost just a few cents, but that's not entirely accurate. The official definition of a penny stock is any stock trading for under $5 per share. These are usually small companies, startups, or struggling businesses that haven't yet made it big. They typically trade on smaller stock exchanges like the OTC or over-the-counter market, though some do appear on major exchanges like the NASDAQ and NYSE. Since these stocks are so cheap, they can skyrocket in value much faster than traditional stocks. But with that comes big risks, and not every penny stock will be the next Tesla or Amazon. One of the biggest attractions of penny stocks is their ability to generate life-changing returns in a very short period. Unlike traditional stocks from well-established companies, which may take years to double in value, penny stocks can skyrocket in just weeks, days, or even hours. This is because they start from such a low base, meaning even a small increase in share price can result in massive percentage gains. Let's break it down with an example. Suppose you invest in a stock that costs just $1 per share. If that stock jumps to $10 per share, you've just made a 1,000% return. That's 10 times your money. Compare that to blue chip stocks like Apple or Microsoft, which might take a decade to see a 100% gain. This kind of explosive growth is what attracts many investors to penny stocks. The potential to turn a small amount of money into a huge fortune is undeniably exciting. Throughout history, there have been legendary success stories of penny stocks turning into billion-dollar companies. Monster Beverage is a perfect example. At one point, it was trading for mere pennies, but as the energy drink industry exploded and Monster grew into a dominant player, the stock surged to over $50 billion in market value. Imagine being one of the early investors who held on to those shares. It would have been a once-in-a-lifetime payday. Another surprising example is Ford Motor Company. Believe it or not, there was a time during the 2008 financial crisis when Ford stock was trading at penny stock levels, under $2 per share. Many investors dismissed it, thinking the company was doomed. But those who saw its long-term potential and held on to their shares saw the stock recover tenfold as the auto industry rebounded. Even SiriusXM, now a household name in satellite radio, was once considered a high-risk penny stock. At its lowest, it was trading for just a few cents per share. But after the company secured major partnerships and subscription numbers soared, its stock price skyrocketed. These stories prove that penny stocks can make you rich, but it's not as simple as throwing money at any cheap stock and hoping for the best. For every success story like Monster Beverage or Ford, hundreds of other penny stocks crash and burn. Many companies never recover. Some get delisted and others turn out to be complete scams. This is exactly why most investors are hesitant to jump into penny stocks, despite their massive upside potential. While penny stocks offer huge upside, they also come with insane risks that can wipe out your entire investment in a blink. One of the biggest reasons is extreme volatility. Unlike big companies like Apple or Amazon, penny stocks are unpredictable. Their prices can swing 100% or more in a single day, and just as fast as they go up, they can crash back down. A single news article, tweet, or Reddit post can send a penny stock soaring, but the hype can disappear instantly, leaving investors with worthless shares. Another problem is the lack of reliable information. Big companies like Tesla report earnings, have analysts covering them, and follow strict regulations. Penny stocks? Not so much. Many penny stock companies don't even make money yet. Some don't even have real products. They just survive on hype. If you're not careful, you can invest in a company that goes bankrupt overnight. And then there's the biggest danger of them all: pump and dump scams. This is when shady investors artificially hype up a stock, causing the price to skyrocket as more people buy in. Then, just when everyone thinks it's going to the moon, the scammers sell their shares at the peak. The stock crashes and everyone else is left holding the bag. If you've ever seen a stock suddenly spike 300% for no reason, there's a good chance it was part of a pump and dump. Liquidity is another huge issue. Some penny stocks are so small that there aren't enough buyers or sellers in the market. This means even if your stock goes up, you might not be able to sell it at the price you want. All of these risks make penny stocks a dangerous game, but if you know what you're doing, there are still legitimate opportunities to make money. Now that we've covered the risks, let's talk about some penny stocks that could actually have major upside in 2025. One company worth watching is IonQ Incorporated, a leader in quantum computing. As AI and cloud computing advance, companies investing in quantum tech could see explosive growth. If IonQ continues securing big partnerships, its stock could soar. Another one to keep an eye on is Alt Alliance, a diversified holding company with investments in fintech, energy, and data centers. If they can streamline operations and capitalize on emerging tech trends, their stock could see a major turnaround. BigBear.ai is another interesting pick, providing AI-powered data analytics for government and commercial clients. As AI adoption grows, this stock could gain serious traction if they land high-profile contracts. Camber Energy remains a high-risk, high-reward play in the oil and gas industry. With energy prices fluctuating, this stock could skyrocket if demand surges or if new energy policies favor domestic production. Finally, there's Mullen Automotive, an electric vehicle company focusing on affordable EVs. If they can execute their production plans and secure solid sales, they might gain ground against bigger players in the EV market. Of course, these stocks aren't guaranteed to make you money, they just have potential. So before you invest, always do your own research. And if you're new to investing, here's something to keep in mind. Success isn't just about picking the right stocks, it's about continuous learning. Warren Buffett, one of the world's most successful investors, reportedly spends 80% of his day reading. You don't have to do the same, but the takeaway is clear. The more you learn, the better your decisions. If you want to make real money with penny stocks without falling into the biggest traps, there are a few key rules you need to know. The first, unlike blue chip stocks, you can't just buy and hold these for years. Penny stocks are extremely volatile, and there's a real possibility that any money you put in could vanish overnight. These stocks fluctuate wildly, sometimes rising or crashing by 50% or more in a single day. This means you should never invest your rent money, emergency savings, or any cash you actually need. Think of penny stock investing as gambling with calculated risk. You're aiming for big wins, but you need to be comfortable with potential losses. So only invest what you can afford to lose. Next, do your homework and focus on real companies with solid business models instead of chasing hype. Many penny stocks are fueled by speculation, rumors, and social media buzz, but not all of them have legitimate businesses behind them. Before investing, dig into financial reports, check company history, and look at their actual business model. Are they generating revenue? Do they have a strong product or service? Have they shown steady growth? If the answer to these questions is no, you're likely looking at a company that is more hype than substance. One of the biggest mistakes beginners make is jumping into stocks that have already skyrocketed hundreds or even thousands of percent in a short period. If a stock has already exploded in value, chances are you're too late to the party. By the time most people hear about a penny stock that's booming, the early investors have already cashed out, and the stock is about to crash. Don't fall into the trap of buying at the peak, thinking it will keep going up. Instead, look for undervalued penny stocks with real growth potential before they take off. Have you ever made quick money or taken a big loss with penny stocks? Drop your experience in the comments below.